Uh, all right. Welcome, whoever is viewing this. Once again, I'm Mike Sokolowski, talking with Tori's extended network of partners over here. And today we have Hunter Evers from Fairway Mortgage, a longtime friend and, I guess colleague, partner, however you want to describe it. But welcome, Hunter, from what I assume is your office. You have some lovely greenery back there.
It's the home office. We'll call it that.
Okay, cool. Thanks. So yeah, if you want to give like a little bit of background, like, how long you've been doing this, and we can kind of dive into kind of current trends and everything like that. But let's let people familiarize themselves with you in that.
Absolutely.
Yeah.
So I'm with Fairway Mortgage. I've been with Fairway Mortgage for going on 9 years. Actually, it'll be 9 years in like a week. So truly 9 years. Yeah. And yeah, we have an office on Newbury Street in the Back Bay. I opened it with 2 other business partners about 3.5 years ago, and things are rocking and rolling. The market's been pretty steady, pretty crazy ever since, and everything's good.
So is Fairway's a nationwide company, and you have a kind of your own office derived off of that?
Yes, exactly. So Fairway's nationwide. We're definitely top 5 lenders in the country. I don't know where we fell for 2020. The numbers are always moving around, but yeah, so it's more of like sort of a franchise, and we have our own office within that. And we get to, run our own business model and stuff like that, and try to stay competitive in terms of rate and costs, and do things that we need to do to make our business partners such as Tori and Michael happy.
Thanks, man. I'm ecstatic. So everything's been good so far. Yeah, so, let's get into it. Find a way to, for anybody viewing to get some benefit out of this. Currently, kind of trends you're seeing, products that people are opting to, even whether that's, percentage down or different types of loans, or refinancing for older, for people that bought prior. Just kind of give me a glimpse as to kind of what you're doing, the last few months in terms of product.
Yeah, so interest rates remain very low, right? I'm pretty sure that's blasted throughout the news everywhere you look these days. So, we have those refinances still coming through the door, but we're always very purchase heavy up front. We try to stay focused on the purchases. The refinances come through, we do a great job for them, but purchases always kind of take the front seat, refinances take the back seat, because you have deadlines with purchases, especially these days where, you got to close in like 3 weeks to even be competitive out there in this crazy market. But, as far as products go, 30-year fixed rate mortgage is still kind of the go-to, especially with rates being so low,
Yep. So
yeah, we're seeing a lot of people still go towards the 30-year fixed mortgage. The rates are very low right now, so people aren't trying to cut the corners and do the adjustables or anything like that to get that 1/4 point drop in the interest rate, because the interest rates are already at 2.8, 2.9, where if they see themselves potentially being there longer than that 5 to 10 or 5 to 10 year time frame.
Yep.
It makes sense for them to just go with a 30-year fix now, knowing that if they were in an adjustable and they were forced to refinance down the road, rates are likely going to be higher at that point.
Gotcha. And for down payment size, are you seeing a lot of 10, 5, 20? And how do people be competitive if they are putting down less than 20%?
Yeah, so as far as down payment goes, in this market, the price points are very high, right? So 20% is not as common as some might think. I get people on the phone and they're like, "Oh, I don't have 20% down. Should I buy?" And you explain to them there are a lot of great options with 5% down, 10% down, even 3% down in some circumstances. So it's walking each client through what their needs are. And especially these days with people bidding over these listing prices, they might think they're putting 20% down, then the appraisal comes back and you got to get a little creative and drop the down payment so that they have some money to put towards the difference in the appraisal. So I'd say the standard, you see a lot of people at 10%, 10 to 15, I think is probably like the average in our market. But again, you still get a really, really good deal. I'd say once you get over that 5% hump, you're not going to get beat up by the PMI too much or the mortgage insurance or anything like that. Mm-hmm. So I tell people at least get there, and then we can figure something out as far as a great deal.
And so mortgage insurance is when a borrower is putting down less than 20%. And so there needs to be, I guess that adds an element of uncertainty of their ability to pay that. So then there's an additional cost per month. Is that how that works?
Pretty much, yeah. So banks, lenders in general, right, they are a lot more comfortable when someone has 80% loan to value ratio or a 20% down payment.
Okay.
But whenever you're putting less than 20% down, that's always going to force insurance in place for that mortgage, whether you're paying it on a monthly basis or you're financing it through your interest rate, or you can even roll it into your loan amount in some cases. But yeah, anything less than 20% down, you're looking at having to pay that mortgage insurance one way or another. So, if you have a good credit score and you put 10% down, that mortgage insurance payment might be like $60, $70 a month, where you look at these Zillow estimators, these Redfin estimators, they're all horrible. They're all wrong. And they have people thinking they're going to pay $200, $300 in PMI. That's just simply not the case.
So why is that, just to cover their butt, or like why is that? Why are they so off?
It's a form of a hedge. Oh, you mean Zillow being off, not the PMI itself.
Yep.
But I don't know. Honestly, I think that it's probably more of a lack of understanding how it works. And yeah, I think covering their butt. But again, where's the accountability with Zillow? Who's going back to Zillow and saying, you quoted my PMI high, I'm mad at you. What are they ever going to do to Zillow?
Oh, so yeah, so they just don't have to be right.
They're just inaccurate. It's simple as that. I tell everyone, reach out to me directly if you're getting serious about a property, and I can give you a PMI quote in 2 seconds.
Yeah, because people do ask me about like those online mortgage calculators and like which ones are trustworthy, but really, like, in the end, a 10-minute call to you or an actual lender is going to be the best way to do that. Right.
That's it. It's simple. You know what I mean? As far as putting numbers together, even if I use estimates for PMI, I've dealt with it so much at this point that I'm probably going to be within $10 one way or another if they have an accurate credit score that they can give me over the phone. But yeah, I don't know. I look like a superhero when people use Zillow for their estimator and then they come to me. So yeah. I don't really mind it.
You're over delivering on an under promise. I think it sets you up. Yeah. So I guess I wouldn't need it too much then.
Yeah, exactly. But yeah, no, other than that, as far as trends go, the buyer pool's humongous right now. There's still very little inventory, relatively speaking. You're starting to see more people get comfortable with the vaccine rollout and stuff like that. They're ready to list their homes. They're ready to have those open house groups come walking through their homes. People weren't doing that last year, right? So, but still, you have the people who put the home search on ice last year coming back into the fold, along with the people who would just naturally be in the market in 2021. So it's almost double the buyer pool with still some serious inventory issues and nowhere to build around here.
So do you think that obviously the buyer demand is built up, but the people selling who have put their life on hold for a whole year, do you think there's going to be like a pretty good wave from that, and the people that would naturally list it this year because they have some sort of plans? Do you think a lot of people have put their plans on hold, and so it'll like start to kind of come back to somewhat normal?
I do. If I were to predict, I'd probably say within 24 months rather than 12. The thing is, with all of these buyers out there and so little inventory, the sellers don't know where they're going to go, right? So it's like, hey, I'm a seller. I have this awesome piece of property. I know I can sell it in 2 seconds, but guess what? Where do I end up? Right back in the pool with all the sharks trying to bid on this one property that they like, paying 80 grand, 100 grand over. So, as time passes and people land in these homes, the sellers will begin coming back into the market. And some people don't have a choice. They have to sell. They get a new job. Life changes. They downsize, et cetera, et cetera. But I do think it'll take probably a little bit longer than within this year.
Yeah. I tend to agree with that too, but hopefully the trend just keeps getting, as long as it's going this way.
I do think, I agree with you 100% on that. We are going to see more inventory hit the market, but it's going to take time, especially in this type of market where it's so competitive. If a seller doesn't have to sell, what's the rationale for jumping into that?
Yeah, exactly. Agreed. So yeah, just bringing it or continuing on this kind of topic, give me a glimpse, like, we've been in the quarantine or getting out of the quarantine for like a little over a year. So what were the types of conversations you were having this time, like a year ago with buyers versus the types of conversations you're having like now?
So that's a really good question. This time last year, this was all so fresh still, right? And there was a lot of uncertainty between buyers and sellers. Like not only did sellers not want the open house groups marching through the house, buyers weren't going out. You had a few opportunistic people who would say, "Oh, okay, let's strike while there's blood in the streets," type of thing, and try to get a good deal.
Yeah.
Some people did, you know what I mean? Like there were sellers who had their, yeah,
I'm down there. Yeah, man.
exactly. There were sellers who had their properties on the market, and then COVID starts to hit, and there's that initial, right, like month where people weren't really sure what was happening. You're hearing about it, and then things got really serious.
Yeah.
So those people that had their homes listed, if you slid in at the last second as a buyer and put in a good offer, you probably got a sweet deal as people started to kind of, retract from the market.
Mm-hmm.
So those were a lot of the conversations, or a lot of the, hey, how much longer is my pre-approval good for? Because I'm going into hibernation for the next 3 months. So
yeah.
A lot of that stuff, and just kind of like keeping the pay stubs and the bank statements refreshed so that they knew that pre-approval was active. But at the same time, the Fed is buying like tens and hundreds of trillions of mortgage-backed securities. So it's driving interest rates down, right? So we were blessed to have the opportunity to do a lot of refinances during that time,
Mm-hmm.
where people didn't have to leave their house. They didn't have to go to an open house or anything like that. But as far as sellers and buyers, they really did kind of completely stop for, I'd say, like 60 days or so.
Yeah.
And then I think people started getting more comfortable, depending on the individual, right, with what they were willing to do as far as getting back out into the market.
Mm-hmm.
But now we're really starting to take that turn, right? With the vaccine rollout, you're starting to see people, there's lines of 30 people down the street at an open house just to see a property. So a lot has changed over the course of a year. We've seen a lot, right, between you and me. So, but yeah, I'm excited to get back at it and help people pursue that American dream, regardless of the timing. Yeah, I still think it's a good time to get pre-approved and try to buy a home.
Yeah,
if you find that right one, it could still pop up.
The prices will keep with the Fed having the rates lowered for the next like year or so, at least. Yeah, the prices are just going to keep going up. Actually, we're going to talk about that. The opportunistic people, I was with an entire family, so husband, wife, and then one of their sets of parents, multifamily in Weymouth. Agent did not tell me it was occupied as a rental, did not tell the renters that we would be there, and it was essentially operating as a hostel. So when we walk in, I open the door, there's a foot sticking out of like underneath one of the bed sheets, and I'm just like, oh my God, I gotta, it's like, I'm gonna die now.
Yeah, exactly. Yeah.
People coming from around the globe in there, and I like went home like stripped immediately, like had to get in the shower, and just like, who knew? Who the hell knew?
Yeah, exactly. And think, not even just thinking a year ago, think a year before that, who would have ever thought that this is what would happen to the real estate industry?
Yeah.
Like, I've known you for a good amount of time now. We started this when we were fairly young. I like to think we still remotely are, but
I would say so at heart, at least. Yeah.
But we're so aggressive out there building our businesses. And then it's just like, I almost refused to believe it when it was first happening. Like there's no way this can happen right now. But it did. And you learned how to get creative and be flexible and do what you had to do to close the deals that you had in the pipeline,
Mm-hmm.
because people are getting scared. Like, oh, do I actually want to move into this new home now? What's going on? Do I want to take out this mortgage that's $1,000 more than my rent payment right now? These are all things that we had to weigh, and there was a lot of uncertainty. It was hard to navigate people through that.
Yeah, that's a good point. I kind of had forgotten how difficult that like first month or two was for just landing the deals, just like that they were safe and closed properly. Because week to week, we didn't even know.
Exactly, and just keeping them intact too. We had on the finance side, right? We had investors kind of shutting the doors and saying, "Hey, we don't want to do loans above 1.5 million." you got 3 of those in your pipeline. How do you call these people and say, oh, we can no longer do your mortgage?
Mm-hmm.
So luckily Fairway, we're an employee owned company. So, we have we have the ability to kind of go all the way to the top and make sure that these deals close. But it was a really tough time for that 30 to 60 days when everything was kind of hitting the fan there.
Yeah, absolutely. Glad we don't have to do it again, hopefully.
Yeah, exactly. We made a lot of progress in the last year. So
yeah, and I guess like kind of just, bringing this home, like what is, I guess, what are the benefits now of like, or how have things changed for the better, or are things more digital now? So are they easier to do? And then how do you be competitive in this market? We talked about upfront underwrite, or have talked about upfront underwriting for a lot. So if you can describe that and what your company sort of does to help people be as competitive as possible without having millions of dollars in cash.
Yeah, not everybody has that.
Yeah.
Unfortunately. Fortunately for me, unfortunately for you. So as far as going digital, we've always been kind of 100% digital. One thing that we've seen really open up here is the e-closings that were few and far between prior to the pandemic. But now that has happened, these attorneys who conduct the closings, as well as us, the lenders, we learned how to be pretty adaptive with and get our butt in gear with the e-closings and get them into place so we could do them fairly quickly so that our clients stayed comfortable. As far as the upfront underwriting program goes, that's one of our programs that we have over here. That's it really sets our buyers away from the pack of people out there who are just technically pre-approved, right? With the upfront underwriting, what we do is we would take a loan application from a buyer, a potential buyer, in advance. We give them the pre-approval as they would typically receive it. So what happens is we get all their documents, we have them submit an application, we'll give them a pre-approval letter within 24 hours of submitting that. But at the same time, what we're doing on the back end is we're submitting their application to our underwriting team. So a lot of banks don't have the ability to do this. And what it does is it helps us move our clients from the batter's box to third base while they're out there looking for homes, right? If they go out that weekend, they see
the sports analogy. That's fantastic. There you go.
Well, if they go out there that weekend and they see something that they absolutely love, they have the pre-approval. They can put their offer in immediately. We do get that done first. But let's say that weekend doesn't go so well, or they put an offer in, it doesn't get accepted. By the next weekend, we look to have them approved by an underwriter. So once they're approved by the underwriter, what they can do is they can waive a portion of their mortgage contingency. We obviously look at appraisal language and how we want to handle that on a case-by-case basis.
Sure.
But it also allows them to close in as quickly as 2 weeks, which, when you're waiving your mortgage contingency and you can close in 2 weeks, you're the next best thing to cash at that point.
Yeah. And the amount of risk is so severely minimized on their end.
Exactly. And, when you're handing a pre-approval from one of these larger banks, not to like knock anybody or anything like that, but some of these listing agents can say, oh, I've had a bad experience with this bank. They're going to take 90 days to close, et cetera, et cetera. When you see the commitment letter, the loan approval letter, the actual approval letter get handed over by your team to the listing agent with our name on it, reputable lender in the market, we deliver every time we say we're going to deliver.
Yeah.
And when they see that, they're a lot more prone to accept that offer. It's a very easy conversation to have when you're submitting your offers for your clients. And I call the listing agent and explain, hey, they're already fully underwritten. All we need to do is get the appraisal done and get the title work, and this thing's a wrap.
Yeah, honestly, bringing you into the call always helps out a lot too. And I know that you're going to take care of that. It's just yet another person that's endorsing these buyers, that is reassuring and kind of communicating the same message that we are on our end too. And there's really everybody's on the same wavelength for that. So yeah, reputation, speed that you guys do that, and the communication just is, it's key, or else we'd be out there for 10 times the amount of time. that we typically are.
Yeah,
100%.
you almost can't have too much of that vouching for the client these days, right? It's
Right.
like anyone who can call the listing agent, please call the listing agent and vouch for my client.
Yep. Exactly.
That's just how competitive it is. But we don't mind doing it at all. You know, we understand those clients are our clients, right? So it's all a team effort to get someone from the start line to the finish line in one of these transactions. And these days it can be very challenging.
That's a perfect time to end it. You know, I've Dan diced this up, but once again, Hunter Evers from Fairway Mortgage. Appreciate you, man.
Absolutely.
Yeah, and we'll keep the deals rolling. So
Absolutely. Thanks, Mike. Thanks, Tori, in general. It's a great company, everybody. Ask them about all of their benefits. There's a whole plethora of them, and they stand by their clients 100%. And I've never seen one client that I've worked with Tori complain. So take that to the bank.
we get rid of them. Yeah,
I think that's a Fairway Mortgage.
with us. Yeah, no, yeah, that's great, man. Thank you very much.
All right, take care, bud.
All right, bye, Andre.